Welcome. Good afternoon. I'm Doug Kreviazuk from the Canadian Payments Canada.
$200
I didn't say the last word.
$200 fine.
Hey. From Payments Canada. And I'd like to welcome all of you here this afternoon to hear what our panelists have to say about fraud and security. When I think about sort of that topic, we know that over the last several years, financial institutions have been in this constant battle, toing and froing between themselves, trying to keep pace with the risks and the new techniques that are being used by the fraudsters. And they're constantly, as we know, the fraudsters are constantly seeking opportunities to infiltrate, to look for vulnerabilities. And that seems to be a little bit easier in a dynamic marketplace. So when you start to think about the fact that we've got a lot of change, you've got a lot of new front-end payment-related services, new processes, changing behaviors of not only consumers, but of businesses, it's really a battle of wits that happen between financial institutions and the fraudsters that have a lot of time on their hands in order to try to get your money. And it's really kind of cool that finally, people, the bad guys that are out there are really looking at payments. It's nice to have that cool factor, and you're attracting all kinds of new players. Unfortunately, we also attract the fraudsters. So I'm pleased today to introduce our two panelists. We have Steve Nogalo from NCR and Marc Loewenthal of Promontory Financial Services, and they're going to try to attempt to answer the question, who is more innovative, the fraudsters or the financial institutions? Now, as we go through the session today, I have a number of questions for the panelists, but I'd also encourage you to become active in the discussion. If as we're talking, you have a point or you want to raise a question, just stand up and we'll try to entertain it. And if we run out of time, we run out of time. So let me first introduce Steve. Steve's the Vice President and General Manager of Payments at NCR Corporation and has been responsible for NCR's electronic payments and check imaging solutions, including RDC, transaction pricing, real-time payments, and payments transformational initiatives. He has overall business unit responsibility globally and is based in Canada along with NCR's payment R&D team in Waterloo. And sitting beside Steve is Marc Loewenthal. Marc is the director of Promontory Financial Group, where he advises clients on governance risk and compliance-related matters with a particular emphasis on privacy, information security, consumer mortgage, credit card, and securities-related matters, including AML and anti-fraud. Please join me in welcoming Steve and Marc to our panel today. Thank you. Gentlemen, let's start with the easy softball question. So who is more innovative? Is it the fraudsters? Is it the financial institutions? And maybe you could talk a little bit about some of the initiatives or innovative approaches that you've seen on both sides of this equation in the recent past.
Sure. Well, at the risk of offending my banking friends in the audience, I'm going to say undoubtedly the fraudsters are more innovative. And if you consider I guess the perspective that each is coming from, it's really not surprising. Fraudsters have an incentive to constantly, and have, I guess, a payback curve to be constantly looking for vulnerabilities in the system and to exploit those vulnerabilities. Whereas on the flip side, financial institutions have come to accept that a certain amount of fraud is considered a cost of doing business. And the business case justification for a financial institution to proactively identify what the next vulnerability may be and make an investment in putting in place protections against a potential unknown, unquantified future loss is a difficult endeavor, particularly in the environment that banks are operating in today, where budgets and margins are compressed in most banks around the world, and the decisions around IT investments have to be made very preciously. I think the other factor that, quite frankly, plays in favor of the fraudsters is their increased agility and their ability to move quickly and rapidly to take advantage of vulnerabilities. And as we've talked quite a bit over the last few days, that isn't historically one of the strengths of large financial organizations, is their ability to be agile and move rapidly. So my vote, unfortunately, goes to the fraudsters.
Unfortunately, I have to agree with you. I think it is the fraudsters that have the advantage for many of the reasons that Steve has noted. And I think, you know, there's some issues there with respect to legacy systems that the fraudsters don't have. It's very tough when you're a financial institution, especially a large one, where you've got a whole host of legacy systems that you are building off of, trying to adapt to new payment techniques, trying to, you know, meet the market needs of the market, and trying to get ahead. And the fraudsters don't have that as a shackle, if you will. Yeah. They have the ability to come in with the latest technology. They have the ability to probe your systems repeatedly and try to get into them from the standpoint of you know, getting authentication information, which then, you know, turns into the fraud. From the institution's perspective, I think it becomes a question of what's your risk appetite. You know you're going to suffer, you know, fraud losses. The question is, you know, really what's the tolerance level and where are your priorities, and that becomes, you know, a very difficult question to try to solve for.
Yeah. And you know, you'd asked the question about, you know, some of the more innovative approaches we've seen. You know, NCR being in the ATM business, as well as the point of sale business, as well as the payments business, kind of sees it from all angles, quite frankly. I've never ceases to amaze me at the continuing innovation we see around card skimming and self-service devices. And this is obviously a very mature, well-established fraud pattern around the world. And NCR and the industry, quite frankly, has done a very, very good job of curtailing that type of fraud. And no sooner do we actually roll out the next either software or hardware innovation that locks down a card skimming technique, then a new one pops up. And I'm not going to go into any particular details about one that is particularly innovative. But as we've started to lock down trapping and skimming devices for cards, we've now seen them move more increasingly towards software. And that's something that's probably emerged in the last few years as a major threat globally, is malware getting deployed onto either POS or self-service devices. And so the broader nature of security within the infrastructure, as well as a physical endpoint that is a client device, has become paramount for financial institutions, and how they stay ahead of that, using really some now proactive analytics to start doing anomaly detection, both of the behavior of the payment and the physical device itself. I'm sure you've got as well other examples.
Yeah, I think still the major vulnerability in a lot of these is really a very, you know, common one, which is phishing. Very often, you know, what tends to lend to the vulnerability within your systems is the fact that somehow an employee gets phished, spearphished or whatever, and their authentication information allows somebody to come in, steal a password, which then allows them access to your systems, and then, you know, they have the ability to insert malware in order to, you know, get at information, account takeovers, et cetera. And so it becomes a very difficult issue because that's really your weakest link. And what I find with institutions is that they haven't invested enough in training their employees, which is really, from my perspective, sort of the baseline in terms of how you begin to combat fraud. You really need to make sure that your employees are adequately trained, not just generally in terms of overall general information security training, but focus training. So, you know, if you're looking at you know, your ATM machines, or you're looking at your credit card processes, or, you know, debit card, or whatever it is, that those employees get specific training in how the systems work, how fraudsters are able to come in, try to convince them to turn over authentication, identities, et cetera. And that is really where I think more time could be invested, which is not always invested today.
Okay, let's move on to the next set of questions. We've heard a lot over the last day and a half about fintechs. They're introducing new products and services, and I'm wondering, some people fear them. They fear that there's risk associated with it. I'm wondering from your perspective, if you could maybe comment about what are some of the changes and what are some of the impacts that are resulting from their emergence in the industry from a fraud or risk perspective.
Yeah, I spent a lot of time with fintechs being out of the west coast of San Francisco. And one of the things that I find is that they come to this with really a lot of naivete about what's necessary from an information security and privacy perspective in order to protect the applications and the systems that they are developing. I actually thought that the gentleman that spoke about Coho yesterday was probably one of the best presentations I have heard, because he plain and simply said, we're developing this app, it's in beta testing now, but we're not going to try and remake any of the connectivity bridges or anything that we need to do. We want to sit it on top of an established system. And that's something that I don't see a lot of fintech folks thinking about, is that it's very hard to set up these networks and bridges so that they are fraud-proof, that they meet information security requirements. I think a lot more thinking needs to go into how do we utilize existing structures and innovate off of those in terms of how we move the whole payments applications forward.
Yeah, absolutely, I agree. And I think, the majority of fintech endeavors we've seen aren't actually new payment types, and they are leveraging the existing infrastructure in place, with the exception of, obviously, Ripple and others like that. But what they are doing is creating new origination and front-end applications that create a different user experience. And so I think what the reality of what that means is the number of entry points and the places which with customer-sensitive data are now being stored is growing significantly. And the extension and implication of that is obviously increased points of potential compromise. And it's not to defame any fintech in terms of their security practices or policies, but as we all know, the more that data is exposed, the more it can potentially be compromised, either through fraudsters or even potential inside fraudsters who may have access to that data within the organization. So I think that's one of the realities. And so in the end of the day, financial institutions who are often backstopping these payments are going to have to think very clearly about their own liability agreements with payments that they may be partnering with, and how as an industry we can work to keep that data safe. And I think a big part of that comes with consumer education as well, and helping consumers be more wise. And you talked about training employees, but it amazes me sometimes when you talk to friends or family, my wife, how they fall for what are very obvious scams, very obvious scams. I mean, my son had a watch that he wanted to sell on Craigslist. And some guy responded within minutes saying, I'll give you $2,000 for this watch to your PayPal account. Well, this is a well-known scam. For me, for you, I'm sure for anybody else in the industry. He was jumping for joy and prepared to start shipping this watch out. And again, consumer education has to be a big part of it as well.
When you think about, there's a number of different arenas for payment channels. Is there anything unique from a threat perspective in the mobile space?
Well, I think the mobile space really presents some unique challenges in the sense that now you're trying to control everything through a phone. The need for multiple layers of authentication and identity recognition becomes very, very important. The fact is that mobile devices bring a whole new level of activity. For example, SIM card swiping, where somebody convinces the owner of a mobile phone to give up their username and password. The next thing you know, they have access to their bank account. They convince the bank to now port all of the account information over to this new SIM card, and bingo, everything is wiped out. So I think that mobile payments, although I think from a communication aspect, from the standpoint of the operability of the system itself, are secure, it does introduce a whole different layer of how the fraudsters can get in and take over your account.
Yeah. By the same token, I think mobile does present opportunities, though,
Yes.
To help close that loop, though.
Right.
Because it's incredibly powerful from, again, an education and a, let's say, a validation perspective. You can give real-time alerts to consumers on transactional activity. That's something that has never been possible historically. And so it empowers financial institution and payment service providers to really put the consumer in the driver's seat, to notify them of any transaction that may be taking place in their account. And that obviously goes beyond mobile payments, but using the mobile device as part of a broader security strategy.
I absolutely agree. And I think, obviously coming from the States, I come into Calgary and, I'm charging dinner or whatever, and immediately on my mobile phone, I get a message saying, this is a foreign transaction, we have approved it, but if it's a fraudulent transaction, call Chase or call American Express, whichever card, I may have used. So I think that's right. I think even though it introduces a level of fraud, the other side is that there's a great deal more assurance about what's going on, and I, as a consumer, have a lot more knowledge about what's happening with my account.
Right.
Yeah.
So do you see, with the changes in sort of the distribution channels, are there new technologies or processes being put in place, like blockchain, that may in fact help prevent some of this mobile fraud?
I think blockchain, and certainly it's been covered a tremendous amount at this conference already, so I'm not going to go into it in a lot of detail, but I think it's a useful tool. I think it is something that you put into the toolbox. I think it still needs to be tested. I think it still needs to be shown that it can work with large networks. I don't think we're quite there yet, but I think the concept behind it makes a lot of sense, and that it can be a big reducer of payment fraud. So.
Yeah, and I think for sure the potential is tremendous, as we've been talking about it for the last 2 days, but it's not a here and now solution. It's going to be, and I think if we looked at the vote the other day on one of the things, it's going to be an evolution over 5 to 10 plus years before blockchain achieves scale in terms of payments. I do see, though, technologies and solutions being put in place to deal the increasing fraud threats that financial institutions and customers are seeing. And one of the most significant is really a shift towards a true enterprise fraud hub as part of a fraud strategy within our financial institution. And historically, fraud systems have been put in place to combat specific fraud threats that are either product-related, deposit fraud, or payment type related, a la check fraud or card fraud. That's no longer adequate, quite frankly. And the bad guys aren't isolating themselves to a single payment type or a single payment instrument or a single channel. I mean, they are looking across all of the channels. And if you look now at the proliferation of channels, the proliferation of payment types, the proliferation of products that financial institutions offering, you really have to have that holistic view across the enterprise and be able to correlate data from all of the different points to very quickly implement countermeasures. Layer on to that the increased risk associated with real-time payments and the need to decision what you're going to do with a payment request in real time. And again, the complexity of those systems becomes, and the importance of having that enterprise fraud system is even more critical. And you know, this is where we really start seeing machine learning and artificial intelligence becoming a critical part of that strategy. Without those kinds of technologies and tools, your ability to sift through and make sense of that massive set of fraud data becomes near impossible. And the organization you need to have in place to keep up with you know, a conventional rules-based fraud system is just not cost-effective either.
Right. Okay. Yeah, I think the analogy on the information security side is that you're seeing more and more financial institutions opt to create SOCs, or security operations centers, that are devoted entirely on the information security space in scanning the enterprise, looking at the threat information that's coming in, either from other financial institutions or from other organizations, sifting through it and then deciding, you know, on a prioritized basis, you know, which threats they need to be dealing with. Because I think, as Steve said, you know, in the fraud space, as well as the information security space, you get so much information on a daily basis that you really have to have a way, either through machine tool learning or some other means, to be able to prioritize where you're going to go first and how you're going to defense against it.
All right, so I'm going to give you guys a break, and we're going to go to the audience. You thought you were coming in here for free? No. This is your turn to work. So we've got a question for you. Are changes in the payment industry changing the nature of the fraud that financial institutions must address? Please record your vote.
So we've only have 11 votes so far, and they're very skewed. I'm actually quite surprised by this result.
Yeah.
I'd like to see if that changes when the vote count goes up here a bit. Not really.
No,
I mean,
yeah.
that's very interesting. I mean, that says two things to me. One is that there is a recognition that the nature of fraud has changed, and there's a recognition of a need to take action, and the fact that they're saying FIs are not ready to address. And so that's probably the first and most important step in the journey, is that recognition, and the recognition that we need to take action to address it and keep the financial system safe and secure.
Well, I think maybe the two of you influenced it with your opening remark that fraudsters are ahead of the game.
Maybe so.
All right, so you're not off the hook yet. Audience, one more question for you. We have, I think, 5 questions in total. Is payment fraud a showstopper for the development of mobile payment? Yes, no, or maybe? Oh.
Well, I think that's a great answer, because I think the idea behind fraud prevention, information security, all of that is that you want to make sure that it's an enabler. And the idea behind all of this from the standpoint of fraud protection is that you want your fraud protection tools and the things that you were using to increase consumer confidence. You want to make sure that you know, folks trust your institution and the ability to handle their money and their payments. And so the idea is really to make certain that what you're putting in place are systems, processes, tools which enable the business but don't prevent it from developing.
Mm-hmm.
Okay. So let's move on then. I know historically most of the fraud we've been talking about at these conferences has been either check-related or card-related. We know that over the last dozen years with the development and implementation of EMV technology, chip and PIN, the landscape's changed. How do you think the adoption of EMV in the U.S. will affect the U.S.? And more importantly, from my perspective, what do you think it will have an impact from a Canadian perspective? We have a lot of north-south traffic.
Yeah. I mean, sorry, you want to go ahead? Yeah.
I was going to say, I don't think the U.S. has gone far enough. Yes, we now have, the chip and PIN cards, but there certainly has not been universal adoption. Many establishments have not converted over. The other thing that the U.S. does not have is a PIN. You know, whenever I travel abroad or travel to Canada, I mean, they all look at me and say, how come the U.S. doesn't have a PIN? Everybody has, you know, has a PIN, and so consequently, I have to go through an additional authentication process when I use my card at a terminal in Canada. So I, for one, don't think the U.S. has taken enough steps to really combat it, and I think where we are now with just the chip in the card is kind of a halfway measure.
Yeah, no, I would agree. And the U.S. has certainly got a long way to go.
Yeah.
But interestingly, though, when you look at the evolution of EMV, we could plot very, very clearly as one geography was successfully deployed EMV with chip and pin, mind you, with chip and pin, the fraud in that geography dramatically decreased. And we saw that in Canada. We've seen that in every geography. But the fraud didn't go away. It simply moved geographies and went to the next most vulnerable location, typically the one next door. So it will be interesting to see that if the U.S. truly does get behind EMV and the level of card fraud we see in the U.S. goes down, where will that fraud shift to? Where will that fraud shift to? And we're already seeing, again, in most other geographies, it's the dramatic growth has been in card-not-present fraud, right? And that's driven really by two factors. One is the advent of EMV, chip and PIN, widely adopted. But the other one is the volume of e-commerce business growth and the exponential growth we've seen in terms of online purchases, which are card-not-present transactions. So when you combine those two factors, absolutely we should anticipate a spike in card-not-present fraud, account takeover, application fraud, loan fraud, other areas of the system where we're going to be seeing those fraudsters shifting and looking for softer targets. And that's what it's all about.
Right.
Where can they find the softer target?
Right. I think one additional sort of defense to that is actually the mobile device. Because you can, for example, download from American Express or Chase or any of the major card issuers, you can say, if there's a card-not-present transaction, do you want a warning? And I get them repeatedly, for example, on my American Express card. And so at least at that point, I know that potentially somebody has tried to use the card that in an unauthorized way, and I can at least do something about it by contacting American Express. Mm-hmm. So I think there's an example of how tying potentially your card account to your mobile phone may in fact be a preventer, ultimately.
So do you think that there's a particular framework that we should be looking toward, or a new standard that we should be adopting in this country to help us mitigate those types of frauds?
Switch to the next slide, no. So what we put up on this slide is really sort of a whole list of different frameworks, which frankly, are designed in some way to help give guidance in terms of how you might put in place policies, processes, procedures to help identify and protect against fraud. And what we tried to do here was really just sort of show the amount of different types of frameworks that there are. On the card side, you have PCI, which now has been strengthened via its new release in terms of additional protections. There's NIST. There is ISO. There's been a lot of talk at this conference about ISO 2000022, and although that is more of an operational aspect, when you tie that to some of the other ISO guidances, you can come up with a particularly strong framework. But as I try to advise my clients, it's a framework. You have to decide how this is going to work within your institution and how you'll adapt it to your particular practices as it relates to fraud prevention. So it serves as a guidepost, but it's not a complete answer. I mean, you have to come in and actually make the framework or design your your fraud prevention practices around the framework in order to make it successful.
Yeah, no, I'd agree. There's no prescriptive guideline out there, a how-to book for dummies to prevent fraud. I mean, the thing I take away from this slide is kind of the alphabet soup of frameworks. And how does, a financial institution really then apply that, as you say, to their business based on their specific products, channels, customers, and risk that they're undertaking and how they're conducting business. So it really has to be a customized approach for each financial institution.
Yeah, I think one of the things that we are seeing, and actually, there was a repeat of it last week, all of the regulators in the U.S. are now, saying you need to have a regular risk assessment process. You need to have a regular process for assessing your risks. You have to continuously look at your controls, how you're testing those controls, and making sure that you are in fact covering your gaps and remediating them in a timely manner. And the FFIEC last week actually came out with a guidance that was spot on to the whole payments environment. It was probably in response to the breaches that SWIFT has been getting blamed for, but is really not the party that should be getting blamed for it. But the idea is that they have now come out and said, you got to have a rigorous way to go through your payment structures and make certain that you've got the right assessment tools, the right segregation of duties, the right controls in place, and the right control testing.
Okay. I don't think I'm at this one yet. Maybe I got to go back one. I wanted to ask you one more question before we came to the next one. It's about the industry in making decisions. It's all about trade-offs. So we've heard that for consumers to use products, it's got to be easy, it's got to be convenient, and most of all, it's got to be cheap. But how does that conflict with the decisions we have to make around security and the complexity of the application?
I think that's a great question because no doubt fraud can be probably driven down to zero by being strict enough in terms of how you're going to interact with your customers. But it would be a horrible client experience, an absolutely horrible client experience. And so how do you find that right balance between catching the bad guys and avoiding false positives? And that's one of the biggest challenges that we face in the fraud industry is the more false positives we generate that either decline a transaction that leaves legitimate, or the more times we're layering on security with multi-factor authentication or challenge passwords or other hurdles that customers need to jump through to complete what they see as a simple, legitimate transaction, the more it works against the bank's primary goals, which is delivering great services to their customers. So there is no easy balance, no easy answer. It truly is a balancing act in finding that right mix between great, frictionless, easy-to-use customer experience and managing risk. And again, I'd mentioned before the importance of having enterprise fraud systems, and I would say again, artificial intelligence and automatic learning of risk behaviors and being able to automatically adapt your rules based on an individual client's usage patterns in real time is going to be key to trying to find that correct balance.
Right.
I totally agree. I think, though, that what you also have to do is engage with your business leaders. Time and again, in institutions, the security guys, the fraud guys, et cetera, the risk people tend to work in sort of a silo. And it's extremely important that they engage with the business lines and figure out, with the business, what's the ultimate goal? What do you want the customer experience to be? Here's, what are the pros and the cons? What are the detriments in terms of what you need to be putting in place in terms of fraud prevention? And, how do you kind of work through those initiatives? It's a tough problem. And the only way that you're going to solve it is really by engaging with the business and figuring out, how do you sort of optimize the customer experience but still provide the protection to the institution and to the customer, ultimately with respect to fraud loss.
So it's interesting because we've talked about collaboration. You basically mentioned it just a moment ago. Does collaboration, is it a double-edged sword? Does it promote sort of the perpetration of fraud, or does it prevent fraud? Or a bit of both?
I, for one, think it helps prevent it because but it's, what I tend to talk in terms of is first and second line and third lines of defense. So you're collaborating at the first line because you have, your own risk representatives that are working with your business leaders to try to come up with the optimal solution. Your second line really has to check on them. And you have to have sort of that objective oversight to make sure that the controls that they've agreed they're going to put in place are working properly, that you've got the right defenses in place, and if not, how do you then go about remediating it? So I think it's a check and balance, and you've got to basically do it on what I call a first and second line perspective.
Yeah. When I think about collaboration, I think about it from two aspects. One is, do banks collaborate effectively and sufficiently as an industry to manage fraud and risk? Oftentimes, there seems to be a culture within financial institutions that say fraud is a competitive differentiator or a competitive advantage. And I'm going to use my knowledge of whatever it is, a fraud or a risk, to my competitive advantage, whether that's improving my profitability or allowing my competitor to be exploited. I think that's the wrong attitude. Quite frankly, I think fraud is an industry problem, and I think the more collaboration between banks to view it as an industry problem will not only ensure fraud and risks are managed better, but will ensure consumer confidence in the overall payment system. I think we need to do a better job there.
So just on that point, are consumers well aware of the issues and are comfortable with those issues, or is more marketing or more education required?
I honestly think you need more education.
So do I.
I really do. I mean, I think that especially as new innovations come out into the marketplace, you need to know a lot more. I'll give you a perfect example from this morning. The woman from Samsung who came out and was talking about, Samsung Pay, half the stuff she talked about I'd never heard about before. And I made notes to myself about, geez, I really have to learn more about how this device works and what it does and how it uses my information, and because it's extremely innovative. But even I consider myself to be somewhat sophisticated. I have questions about exactly how it would work.
Yeah, no, I'd agree. Education is consumer education, business education is critical, and in Canada we've seen Interact take a leading role in terms of protect your PIN. But I've often felt financial institutions have treated fraud as a bit of a dirty little secret. They don't really want to talk about it to their consumers directly. And I've often wondered, is that the right approach? And if you look at American Express, they've got a very, very active, visible, primetime television advertising campaign that is touting their capabilities at fraud detection and card fraud detection as a value proposition for the consumer. We've got your back, we've got you covered, we've got sophisticated systems in place that ensure you're protected, giving peace of mind. I don't know why we don't see more of that, quite frankly, because I think that serves two purposes. One is it does allow for a good way to deliver consumer education, but secondly, it allows banks to reinforce one of their strongest competitive differentiations, which is trust, safety, soundness.
So the audience, the question is, are financial institutions protected against card not present, or have they in fact hit the right balance for frictionless customer experience? 35 have voted. It's kind of evenly split.
Yeah.
If you haven't voted, please do.
It's the 34% I'm interested in there. And this is where I think financial institutions need to be really careful when they're competing with fintechs. Fintechs, what they're great at
Right.
is frictionless, fantastic, easy to use customer experience. So if we feel such a heavy slant, 34%, is impacting customer experience, I think that's something we've got to watch out for as an industry.
Okay.
Yeah, I agree, and I think that's especially true of the millennials. I mean, they really want one-stop shop.
Right.
They want to be able to deposit their money, have the app or the device and the device that they're working off of do everything else, and they don't want to be bothered with having a bunch of other different relationships. And I think somehow, we've got to figure out how we're going to address that and still, protect, those sectors against potential fraud.
Okay. So let's go on to our next question, which is, do you feel that fraud is an industry problem and innovation or information is openly shared on that basis, or fraud is industry problem that also is also a competitive opportunity? This is just going back to your point a moment ago, Steve. Or fraud prevention, if it's a competitive advantage, or is it information is shared when it can be a benefit to me? So let's see, what do you think?
So quite a bit of competitive advantage sentiment there,
Yeah.
which is what I had thought. Now, I'd like to see more of number one become the predominant
So
mindset.
I wonder if in the audience, do we have an overwhelming share of financial institutions? If you're from an FI, raise your hand.
There you go.
Yeah. So it's interesting. I know that some jurisdictions do view fraud information as a competitive issue.
I mean, I think we should all acknowledge some of the best collaboration out there is the fraudsters.
Right.
They have absolutely sophisticated global networks sharing best practices on how to defraud. They've got conferences. They share information. They share data.
Organized
It
crime.
is absolutely one of the best forms of collaboration going, and I think we're doing ourselves a disservice not to adopt that mindset.
Okay.
Yeah, I would draw an analogy. In the U.S., we have a group called FSISAC that is information security related, but all the major financial institutions participate in it. And on the information security front, they share information about threats. What are they seeing? How are they trying to prevent them, et cetera? I think the same thing is needed in the fraud space.
Okay. And this is our final question for you in the audience, and then you can put your phones away. You've already heard Marc and Steve's opinion at the beginning about who's more innovative. Who do you think is more innovative? Financial institutions or the fraudsters?
Or a stalemate.
Or stalemate?
Yeah,
Yeah, look at
overwhelming.
You guys were convincing.
there you go.
There you go. There we go. We are, in fact, out of time. Is there any questions from the audience that you'd like to pose to Marc or Steve? Yes.
I can speak to the U.S. What you do see is that, especially where there's been large-scale fraud, be it account takeover or whatever, is that there is a lot of information sharing that goes on with the Secret Service, the FBI, the U.S. Marshal's Office, and sometimes the local police, depending upon the nature of it. And over the last several years, they have become increasingly more open and transparent about other financial institutions that are suffering the same kind of acts against them. So I would say that it's improving in terms of law enforcement cooperation with financial institutions, but it's not always totally transparent.
Yeah, and I would agree, and there's definitely, I would agree, there is a role for law enforcement to help that collaboration, both within a given country nationally, as well working through Interpol, which we've done as well to help propagate, because some frauds are, initiating in one geography and actually being executed in another, or the fraud is migrating from one region to another. And we absolutely need to work with law enforcement to pull those together.
Great. Gentlemen, we're out of time. First of all, I'd like to thank the audience for their attention, for attending today's session. But to Marc and Steve, thank you very much for your remarks. Very insightful. Thanks very much.
Thank you.
Thank you.